I know there's a question coming up there called ATED.
Yes.
ATED is annual tax on envelope dwellings, ATED. Now, um, I had this apocryphal conversation with Mick Jagger, and Mick Jagger lived in Richmond, and our office is in Barnes, not far from Richmond. And the apocryphal conversation is his house was up for sale for 20 million, which is a true story, the one he lived in with Jerry Hall. And so if I had 20 million, I'd go to Mick and say, Mick, that's fantastic. I'll pay you 20 million. And he'll say, Chris, to you, 23 million. And I said, Mick, what are you talking about? He said, simple, Chris. When you buy a property under the stamp duty land tax, you could be paying up to 15% stamp duty land tax by virtue of the fact that I already own a property and this quantum could give rise to up to 15%. However, in those days, Mick Jagger's house was owned by his BVI trust, i.e. a limited company. And that BVI limited company or trust only paid stamp duty at 0.5%. So the property there was owned by that limited company in the BVI. If he sold me the shares in that BVI company, I'd pay 0.5% and I'd get the property because the company owned the property. So therefore, I'd be saving 14.5%. So HMRC brought in ATED, annual tax on envelope dwellings. And an envelope dwelling is a dwelling owned by something that's a non-natural person. So it's owned by a limited company, a trust, overseas entity, anything like that. So that meant that if such a thing happened, then you paid tax under ATED. So if I have a limited company that I own, that I rent out, then I have to register under ATED. I might not have a tax liability, but even if I didn't register, there'll be a fine. If I lived in that property, there would be a very high tax bill. So when it was brought in, HMRC said, okay, ATED's going to apply for every property that's cost £2 million or more. And I can't remember what it was, but they worked out how much tax they'd raise. But they found they hit on a gold mine because they actually raised that tax in 3 months, i.e. a quarter of the year. They said, well, that's brilliant. So then they said, okay, let's reduce it by half. So any property of £1 million or more would come under ATED. And the same thing happened. They made a fortune. So now it's gone down to properties of £500,000 or more fall into the ATED regime. So you need to ensure, you need to discuss whether you are in the ATED and make sure you're registered.